All right, so good evening and welcome to the stream today. We hope that those of you who had the paper today, financial reporting and corporate reporting, we hope that you were good in your paper and hoping for the best as we wait for the results. But today's discussion, we are looking at sorry, advanced audit and assurance, and then management accounting. Now, because these two papers have nothing is in common, but we couldn't have separate sessions for them respectively. That is why we are combining them in one session like this. So what I'm gonna do is to try to balance it, so we do question one, or we do one audit, one management accounting, one audit, one management accounting, one audit, one management accounting, in that order, so that we will be able to cover. Because we could say, hey, let's do different sessions for each of these papers, but that will require a lot of time and we don't have that time available at this point. So we're doing the two together and we're going to be moving together. So a little audit, we'll do audits, run through the syllabus, management accounting, run through the syllabus, sharing some key principles and concepts with you for the final day as you go into the exam hall tomorrow. But like I said, we do one audit, one management accounting, one audit, one management accounting, to make sure that we balance ourselves generally. We also live on YouTube as well as on Facebook, and I see some of you guys joining. You are welcome. Give us a thumbs up on the video when you join. It helps us a lot to reach other people, but most importantly, share the video as well. Let us reach many people. If there are any questions for me, something specific that you would want me to share my thought on in management accounting, in advanced audit and assurance, I want to quickly do that first before I get excited into my discussion. So if there are any questions for me, something specific that you want me to share my thought on, those of you joining us on Facebook and YouTube, you can put it in the chat for me. Those of you with me on Zoom, you can raise your hand, I bring you up, or you can put it in the chat for me if you cannot talk or you have a very noisy background in that case. So any questions for me, something that you would want me to look at, talk about, share my thought on specifically, quickly before I get excited and go into my discussion for the day. So if there are anything, we can bring them up as we go. So let me bring up my slide quickly and let's see what we can do. What do I have? Mm, Why is my cursor misbehaving like this? Okay, so let's go then. So like I said, gonna do audit, do management accounting, do audit, management accounting, in that order. So advanced audit and assurance. Oh my, it's too steep. So advanced audit and assurance, it's gonna be taking center stage on the slide, and then we're gonna have management accounting on the others. Management assurance. At this point, I'm creating my own subjects. So management accounting. So let's go and start the journey. Want to start first with advanced audit and assurance. One of the fundamental issues, 10 marks area waiting for us in the exam hall, is ethics. Because ethics is crucial for the work of the auditor, and so minimum 10 marks question waiting for us in the exam hall on ethics when it comes to advanced audit and assurance. Now, ethics, the examiner has two ways that he can ask the ethics question. The first one is to look at some theoretical issues about ethics, that is looking at the roles of the Institute of Chartered Accountants Ghana in respect of ethical issues, or why should an audit firm carries out its works in accordance with a code of ethics, or why should a professional accountant or the auditor be mindful of being ethical, or why is independence so important to the job of the auditor. So those are some theoretical issues that examiner can throw at you that you need to be mindful of. But then to the main part of the discussion will be the traditional ethics question. So the traditional ethics question at this level will look at the few issues that we discussed in class, where the examiner will present us with a scenario. And as the guiding principle we mentioned, it is important that when we are answering these traditional ethics questions, so for instance, the examiner could say, oh, the accountant has been asked by the financial director of the company to help her to recognize a certain transaction in the books, as the auditor is newly qualified and the financial director has been qualified for a long period of time. You cannot do that as an auditor, right? Because that would be a self-review threat, because when you cannot be involved in the preparation of the financial statements, right? So there is going to be a self-review threat coming up there in that particular case. Other times, maybe the finance director could say, hey, if you don't help me with this, then I'm not going to give you the opportunity for you to get a job, or for you to get continuous appointment in our company, or maybe there are some non-assurance services lineup. If you guys don't help us with this transaction and help make sure that this transaction is recognized, well, you're screwed. Okay. Again, that's an undue influence, intimidation threat. So it is important you understand the context of the way the case study is going to be, or the story that the examiner is going to be telling you. Then you will be able to answer the question. But if you remember, we shared a couple of key principles that you need to take into consideration, and I want to quickly rehash that if possible. So we said that in writing up your answer for the traditional ethics issue with scenario, you want to briefly state the subject matter. Or let me say briefly, yeah, just state it, the subject matter. So what exactly is going on, okay, in the scenario? What is going on? What are we talking about? What is the issue that we are dealing with here? So, briefly talk about the subject matter. Number two, we need to talk about what are the threats that you have identified in the question. Then you need to talk about the code of conduct being breached, right? Then you have to make sure also that you talk about its significance, right? And then you have to also remember to include whether it is at the firm level or individual level. And most importantly is to be able to then tell us the courses of actions that must be taken. Okay? Ways of mitigating or eliminating the threats. Now, I have said this over and over again. It is important you understand that you cannot write ethical issues without stating the mitigating factors, what the entity must do to deal with a problem. Even if the examiner does not ask you, even if the question does not require you to write it, you have to still mention it. So when it comes to that 10 marks area, either we're going to be having some theoretical issues like I mentioned earlier, or the traditional OG ethics question where the examiner will present you with a scenario and it will be your duty to briefly state the subject matter. You look at the threats in the question, what code of conduct is being breached, what is the significance of the threats, is it at the firm level or the individual level, what exactly can we do to mitigate the threat. And that is what we must understand about that 10 marks area waiting for us in the exam hall when it comes to advanced audit and assurance. So it's a done deal, 10 marks waiting for us. And I have written for you over and over again the way that answer must be written, making sure that all these elements are present in your answer. I keep on telling you, this is level 3. Certain errors will be tolerated if you were in level 1. But at this level, you are going out as a chartered accountant. And so certain things cannot be tolerated. So you have to be mindful of the context, of the grammar, and make sure you follow the principles in respect of how you answer the ethics questions. But I really also said that you have to make sure that the fact that all of these things must be present in your analysis does not mean you are writing myself. So you need to be able to keep all of those things in a manner that will be sweet, simple, straight to the point. And I have done that for you over and over again and directed you on how exactly you can achieve that. So I expect you, as you go into the exam hall tomorrow, to be able to replicate this. So you have this blueprint at the back of your mind, and boom, as you go into the exam hall, if the examiner goes with a traditional ethics question, then you want to make sure that you follow these key principles, because that is how you will be able to get a significant portion of that 10 marks that the examiner will bring. 8 over 10, 7 over 10, that's okay. 9 over 10, that's okay. If your grammar is superb, you follow the principles, you'll be able to, get the answer you're supposed to get and get a significant portion of the marks. So that's the first part: advanced audit and assurance, ethical issues, 10 marks question waiting for us in the exam hall, and how exactly we are going to be approaching that question. Let's flip to man accounting. When it comes to management accounting, there are some key issues that I want to even bring you up to speed with before we get excited to topical or questions numbers. I have told you over and over again that to pass the management accounting examination, there are a couple of things you have to understand. The first thing has to do with cost classification. And the reason why cost classification is very important is especially when we are faced with a semi-fixed or a semi-variable cost. In that case, then one key principle that will stand out for us to apply is going to be the high and low method. So that is a fundamental principle. As you are going into the exam hall, management accounting, it's a fundamental principle. So the various bases of cost classification: classification of cost according to behavior, classification of cost according to nature, classification of cost according to production or not production. All of those things are very important, but most importantly, it's going to be a scenario where you are presented with a semi-fixed or a semi-variable cost, and you need to split it into the fixed and variable components. Then you would have to apply the high and low method. Remember, you may be required to apply the high and low method even under preparation of variance or budgeting, or the issues in respect of dealing with short-term decisions or other areas. So it's a fundamental principle which I know you know, so you know how to deal with it. If you don't know, make sure you go through it before you walk into the exam hall tomorrow, because this is a fundamental principle. Now, with the high and low method, you know the rule already. We're going to pick the maximum total cost minus the minimum total cost divided by the maximum output minus the minimum output. Boom, we gone. Now, there are some times when it will not correspond. In other words, the maximum total cost will not correspond exactly to the maximum output, and in that order. When that happens, the unit becomes the basis. The production level becomes the basis for determining what is maximum and minimum. so that you'll be able to then do your calculation in that particular case. Then another thing you must understand is when we are having a step cost in the story. We solved a couple of questions in session 1 and session 2 under where there is high and low method build up in the story, and there are circumstances where you would have to subtract the high and low the step cost from the maximum cost before going ahead to do your high and low method, or sometimes you have to finish with the calculation and subtract it later on. All of those principles are going to be crucial. This is a fundamental thing. Whether it's not about getting a specific question about it. Before you walk into the exam hall as a management accounting student, you have to understand cost classification. You have to understand the principles behind high and low method, because whether you like it or not, there is a high percentage, about 98% of probability that you're going to apply the principles under cost classification high and low method. Remember also that after the cost classification high and low method, then you come to the costing techniques, which we spoke about, and that is the marginal costing principle. I believe by now you are okay with the marginal costing principle, the absorption costing principle, and their senior brother, activity-based costing, ABC. It's very important you understand these principles. Why? Because under short-term decisions, we are applying marginal costing. Under investment appraisal, you are applying marginal costing. Under budgeting, you are applying absorption costing. Under variance analysis, we will apply marginal costing and absorption costing depending on the context of the question. When we are calculating overhead variances, the sales volume variances, and even when the examiner asks us to prepare the reconciliation statement or the operating statement. So you have to be careful. By now, I know, all other things being equal, you don't have any problem, no shadow of problem about marginal costing and his brother absorption costing. Remember, we could have a dedicated 50-mark question in the exam hall about marginal costing, absorption costing, activity-based costing, where the examiner would want us to prepare either a cost card for a job or a cost sheet in that particular case. And it is important you understand how to apply the principles. One of the things that will really be interesting is, application of the absorption costing when we are preparing the profit statement, over absorption and under absorption. You remember the principles. We compare the budgeted overheads to the overhead that has been absorbed, and that is how we determine whether overhead is over absorbed or under absorbed. If overhead is over absorbed and we are in the profit statement, certainly you're going to go and add it back. If the overhead is under absorbed, then certainly you're going to be subtracting it. So marginal costing, crucial. Absorption costing, crucial. I hope that by now you have no problem about these guys. Then we go to the boss itself, and that is going to be the activity-based costing, where you are taking everything to another level. Activity-based costing, remember the principles there. Activity-based costing is also crucial because remember, we can apply the activity-based costing under transfer pricing calculation. You remember the question we solved in class during the discussion of that final topic. So activity-based costing is going to be crucial as well. Remember, we are looking at the cost pool and then the cost drivers. Then we calculate the overhead recovery rate for each of the cost pool. Then you now allocate using the various drivers for the individual cost centers or products that we have in the context of the question. So on a basic level, cost classification, high and low method, costing techniques, marginal costing, absorption costing, activity-based costing. You shouldn't fumble with any of these principles generally. You shouldn't fumble. You shouldn't have any problem with these principles. Because, like I said, this will then set the tone for us for everything that we are going to be talking about. So, just foundational level, management accounting students, we need to understand the cost classification and the cost techniques. Very important. Now, once we get these fundamental issues out of the way, we now go to the specifics. And the specifics that I would want to begin with, it's going to be the issue about the question 1, performance measurement. Okay, performance measurement. That is question 1, 15 marks, waiting for us in the exam. Or if the examiner gets goosebumps, he's going to make it 20. Now, we've discussed the various perspectives that the examiner could come from in this question 1 area, because he has a lot of options that he can come from when it comes to the question 1 in the management accounting examination. But a couple of things you want to just keep in mind. Number 1, we could have the whole organizational performance. Okay, the organizational performance, which means that we are going to be using ratios to evaluate the whole organization's performance. So we'll be required to probably calculate profitability ratios, liquidity ratios, and the gearing ratios. Then we interpret them the way they have to be interpreted. That is the whole organizational performance. So we can use just financial indicators for the analysis. Then the examiner can still ask us to do the whole organizational performance using both financial indicators and then non-financial indicators. Sounds good? Using both financial indicators and then non-financial indicators. And so this is where I told you balance scorecard could come in. So the examiner could give you the data and ask you to use the balance scorecard to evaluate the performance of the organization from the 4 perspectives: financial perspective, customer perspective, internal business process perspective, and then learning and innovation perspective. All depends on the context of the question and what the examiner is seeking to achieve generally at the end of the day. So we can have a whole organizational performance. Number 2, it's going to be the concept of divisionalization, right? The concept of divisionalization. If you remember, this is where we are measuring the division's performance using the return on investment and then residual income. What did we say? In return on investment, we said we will bring the division's profit and divide it by the capital employed of the division. In residual income is the divisional profit minus notional interest. Remember, we said when we are doing the divisional performance evaluation, our focus is on the controllable profit of the divisions. Controllable profit. What does that mean? It means if any head office cost that has been incurred is being absorbed to the divisions, we are going to take them out, because we want the actual profit that the divisions have earned individually based on the work that they have done. So we could have ROI or RI coming up in that particular case, or the concept of transfer pricing, where we are determining the price at which one division is going to sell to another division for the most part. Now, if we are going to determine the price at which one division sells to the other division, what are the models we use? We spoke about a couple of concepts that, hey, we have to look at whether the selling division has limited capacity or unlimited capacity. If the selling division has a limited capacity but an unlimited external sales, then the minimum transfer price would have to be the marginal cost of production plus the opportunity cost. That's a principle we established. But if the selling division has an unlimited capacity and limited external sales, then the minimum transfer price will be the marginal cost of production. That is the idea about the transfer pricing. And if you remember, we solved some questions in respect of the principles and even how marginal costing, how activity-based costing applied when we are dealing with the transfer pricing. So that is also another area that the examiner could throw at us in the question 1. Now, like I keep on telling you this, the examiner has brought these things over and over again. over and over again, cyclical, repeated basis, topically. So as you go into March 2024, the examiner can decide and bring in whatever he wants to bring. So he can bring organizational performance. You are doing some ratios, boom. He can bring balance scorecard where you are using both financial and non-financial performance. He can go for divisional performance measurement, ROI, RI. He can go for transfer pricing. It's a dance. That's it. Or he can go with the other model, which is the Fitzgerald, which is the only thing he has not asked yet. Fitzgerald and Moon building blog in that particular case, where we spoke about the three things: dimensions, the aspects of performance that the organization has to measure, standards, the KPIs we set for each of the aspects of performance to measure, and then rewards, the reward system that has to be put in place to be able to help to achieve the KPIs, and then to be able to then achieve those performance aspects of the organization. So this is give and take our question one area coming in. Then certainly the fourth thing will be, performance evaluation in the public sector. So not for profit making organizations. For the most part, that's going to be a written part. And if you remember, we said when it comes to not for profit making organizations, we are going to be using what? Value for money. Economy, resources must be obtained at a least cost. Efficiency, the relationship between input and output. So in the utilization of the resources, we must obtain the maximum output from the utilization of the resources. Effectiveness, which means resources must be able to meet their objective at the end of the day. The examiner can also throw in performance measurement in not-for-profit making organizations and for-profit making organizations, and whatever he wants to do. So in our question one area, 15 marks, the examiner can come from any area. But these are the principles underlining each of these areas and what you have to be on the lookout for. Like I told you in class, don't try to focus on any of the areas. Know and remember the principles in each of the areas, because that is what is going to be playing out generally in the exam hall when it comes to dealing with this. Okay, so that's our question one there. Remember the fundamental issues, and then we come to question one. So let's flip to advanced audit. The second area in advanced audits that we are going to be excited about, it's going to be audit procedures. This is a 20 marks area waiting for us in the exam hall. Audit procedures and its brother, audit evidence. Now, if you remember, we said in accordance with ISA 510, the auditor is required to obtain sufficient and appropriate audit evidence in carrying out his duty. The auditor is required to obtain sufficient, appropriate audit evidence to be able to issue an audit opinion at the end of the audit. Okay, what is sufficient? Enough evidence. What is appropriate? It means the evidence should be reliable. Okay, what does it mean when we say audit evidence is reliable? A couple of the things we shared was that evidence obtained directly by the auditor is more reliable than evidence provided by the client entity or its management. Evidence in original documents are more reliable than photocopy documents. Then evidence in written form are more reliable than evidence in oral form. And so that is why we said when we are carrying out our procedures as auditors, even in that oral discourse that we're going to be having with management, the auditor is going to be writing the management response down, and at the end of the day, the auditor will present that to management and say, hey, listen, this is what we asked you. This is the response you gave. Can you read to see if that was what you actually meant? And when you finish, you sign for us, so that that oral conversation becomes a written conversation, which will be added to the working paper of the auditor. That is a concept of audit evidence. Now, it depends on the context of the question, because there are a couple of keywords that the examiner can use that should bring your brain to audit procedure situation. Sometimes the examiner can say, hey, what should be the auditor's response? If the examiner asks you for the auditor's response, he is asking you about audit procedure. If the auditor asks you what evidence should the auditor be looking for, right? What evidence should the auditor expect to find in respect of a certain subject matter? He is talking about audit procedure. So he either it's about auditor's response, or what evidence should the auditor expect to find, or he will go traditionally to say, hey, just describe the audit procedure. So he could go directly and say, hey, what audit procedure should the auditor undertake, in order to gather the evidence to be able to then reach conclusion on what the entity must do generally based on what is available in the context of the scenario. So these are the keywords. When you hear what should be the auditor's response, audit procedure. When you hear what evidence should the auditor expect in reviewing something, audit procedure. Then audit procedure, right? So these are the keywords that must guide us. Remember, it's a done deal, 20 marks waiting for you in the exam, or all you need to understand is the principles. Now, what are the guiding rules then? So we mentioned that when it comes to the audit procedure, a couple of things are very important. And the first one is the materiality, right? So remember, before you finally throw your book away to then go and sit down, quickly just review the materiality threshold. The materiality threshold guidelines. Quickly read through that, because if the examiner gives us profit for the year or revenue and net assets, that means you have to determine the materiality of the subject matter, because that is going to be crucial there. So materiality, you have to bear that in mind in the discussion in that particular case. The second thing is for you to look at the nature of the subject matter. What am I looking at here? What is the auditor, what is the question asking me to do? Because the nature of the subject matter will help you to understand the IFRS that is at play. And remember, I told you that the work of the auditor is first from the accountant's perspective, because you have to know what the accounting standard says about the subject matter before then you can know the procedures you will undertake to unearth whatever evidence you are looking for as an auditor. So the nature of the subject matter will help us to understand the IFRS in question. Then also the nature of the subject matter will inform us about the assertions that we are testing for. Okay, the assertions to be tested. And so we mentioned that the assertions to be tested, that is the ACCA cover, can be categorized into 3: transactions and events. Then we are looking at occurrence, we are looking at classification, we are looking at completeness, we are looking at accuracy, and all of those things if it is a transaction and event. And we've gone through all of these things in our discussion. Okay, account balance at the reporting date, meaning the subject matter we are auditing or reviewing is actually on the face of the statement of financial position of the entity. Then in that case, we are looking at valuation, you are looking at classification, you are looking at right and obligation, you are looking at completeness. So the nature of the subject matter will help you to understand what accounting standard will be at play, number one, and then what assertion are we going to be testing. And please, I want you to also remember the structure of the question that we discussed during the mock, where the first part of the question asks us to evaluate whether the entity has done the right thing in terms of the accounting treatment. So that's where the accounting standards come to play. So in some questions, like the question we did in our mock, the examiner will ask you that question: has the entity done the right thing, or are they on the wrong path? Then you have to state that down. Then what difficulties or challenges will the auditor encounter in auditing such subject matter issues? So please be mindful of that context of the question. If the examiner asks you things like that, you will go like that. If not, then we will go with a traditional audit procedure. So materiality, the nature of the subject matter, so that we know what IFRS we have to apply. Then what assertions can we test for? Is it a transaction or event? Is it a balance at the reporting date, or is it about the disclosure requirement? Very, very important. Now, once we have been able to establish all of that, then certainly we can go with the audit procedure situation in the discussion for the period under review. So what audit procedures will we undertake? Remember, our 5 vowel sounds will be at the back of our mind. A, E, I, O, U will be at the back of our mind. But I've told you this, that although at the back of your mind, you're going to have analytical procedures, inquiry, inspection, observation, recalculation, and reperformance, and all that. It's okay, but you can get a lot of your points from just these two guys. Inquiry, because no matter the subject matter in the question, you have to ask some people questions. You have to ask management something. You may have to ask somebody in the company something. You may have to speak with somebody outside. You may have to speak with other stakeholders. So, inquiry. Again, no matter the subject matter you're going to be given, 99.9% of the time, you're going to do some inspections. Either you're going to inspect title deed, documents, board minutes for authorization, invoices, goods received notes, or you're going to inspect the physical, vehicle. If we are dealing with inventories, we are dealing with non-current assets, property, plant, and equipment, or we are dealing with inventories, then you have to go there to do a physical count of the inventory to check the state of the inventories. So yes, there are 5 things, A, E, I, O, U, but I've explained this to you already in class. If you're good and you understand the structure of the context of the question, I can guarantee you can get a lot from just making inquiries and doing what? Inspection, no matter the subject matter. So 20 marks, it depends on how the examiner is going to be excited. Either he will bring you 3 subject matter issues, spread it over 20 marks, or 4 subject matter issues, spread it over 20 marks. So I don't want to say, oh, focus on this, focus on that. Nah, just understand the rule, and don't try to, do that. Okay, oh, the examiner will bring this. No, don't do that. Just get it. Our keywords to let us know this is about audit procedures: materiality threshold calculation to determine whether the item is material or not, the nature of the subject matter, so that tells us about what accounting standard is likely to be featuring in, and what assertions we can test for. Because once we know the accounting standard that is applied, we know what we should be looking out for as auditors, and that would then guide us about the inquiries we can make and the various inspections that we can undertake as an entity. So when it comes to audit procedures, 20 marks waiting for us in the exam hall. This is what I want you to understand. But in addition to this, if you remember, I shared something with you. What the heck? Upgrade to what? Give me a sec, okay? Let me see. What? Advanced audit and assurance. Yeah. I want to show you this once more. Audit evidence. You remember in the book, we shared with you some guiding principles on audit procedures and audit evidence. If you have the book, page 153, and I told you that, oh, this is just serving as a guideline for the most part in respect of this. right? So we have a lot of subject matter issues there that will serve as a guideline to you. But that is our second area, audit procedures, 20 marks, waiting for us in the exam hall for advanced audit and assurance. So number one, ethics, 10 marks. Number two, audit procedure, 20 marks, and the various things that you have to understand and keep in mind again as you go into the exam hall when it comes to dealing with audit procedures. Okay, then let's go to man accounting. So we've looked at question one, man accounting. The next thing in management accounting that is going to be there. Now, I'm doing it question two, but that doesn't mean that will be in question two, because in man accounting, the examiner doesn't have a specific routine on where the questions should be. So the second issue is going to be the issue about investment appraisal. There is a surprise party that the examiner can throw for you in the exam hall, and the surprise party is, which is rare though, 99.9% of the time that party shouldn't be organized, but he can throw a surprise party for you where you will go to the exam hall and there is nothing on investment appraisal. Not that there is nothing, just that there will be just some theory questions, 10 marks for you. And so if you remember, one of the key things I've told you is that every topic in management accounting, there are theories there. And something like the question one we spoke about, there is a lot of theory here. The balance scorecard, the concept of divisionalization, transfer pricing, the objectives, the limitations of transfer pricing, the Fitzgerald and Moon, value for money. So there's a lot of theories here, right? But when it comes to investment appraisal also, there are a lot of theories. The theories will include the capital budgeting process, right? The capital budgeting process. It's a 10 marks question that the examiner can ask you directly. 10. He's done it before and he can do it again because he has exhausted all of the things that he's supposed to ask when it comes to investment appraisal on a theory level. And the calculation level too, he has exhausted all of them for the most part. So as you are going into 2024, he's just going to bring one of those guys and ask you something about it. So a theory there is going to be the capital budgeting process. I mean, the steps we go through: idea generation, project screening, project evaluation, acceptance and implementation, and then evaluation, monitoring and making changes. So that theory that we discussed is important. The examiner could throw a question at you there. Then the key area is going to be the methods, right, of evaluation, or the methods of appraising projects. So we have the payback method, which is going to talk about how long it takes for us to recover the initial capital outlay of the project. And the rule is that if we are comparing two projects, then the project with the shortest payback period becomes the project that the entity is going to be selected. Or if we are given the payback period of the entity, then what is going to happen is that we compare the payback we have calculated to the target payback of the entity, and if the calculated payback is above the target, the project is rejected, but if it is below the target, then the project is going to be accepted. But if you remember, we said something that the payback period has a limitation in that it doesn't consider time value of money. So to fix that, we have the discounted payback period, where we are going to take into consideration the time value of money. Okay, so you remember the schedule: year, cash flow, discount factor, present value, and then we go with the flow as the cash flow comes in, and then we calculate our payback. So there's also the discounted payback period. But whether we are using the organic payback or the discounted payback, there are limitations on these. That number one, they usually don't consider the cash items after, or the remaining cash flows after the payback period. They don't consider that. Number two, they don't consider the effects of tax on investment, and sometimes they may not even consider the effect of working capital requirements over the project, although the methods can be modified to accommodate tax, capital allowance, and all of those things, but it is not considered. So on the calculation side, you must understand how the flow works, and then on the theory side, the advantages and disadvantages, you must also understand them. Then we come to the accounting rate of return. Certainly that one is coming from an accounting perspective. I think that was what was asked last semester also, but we are coming from the accounting perspective, and then we are going to calculate the average annual profit divided by the average investment times 100. And the rule is simple: when the accounting rate of return exceeds the target rate of the entity, we accept the project. But if it is below the target rate of the entity, we're going to reject the project for the most part. So that is the idea about the accounting rate of return. But where the examiner likes a lot to, flex his muscles on, the issue in respect of the net present value and his brother IRR. Remember, there are various names that the examiner can use to mean internal rate of return. So it can be internal rate of return, it can be the break-even rate, it can be the rate at which NPV of the project is 0. All these are other names that the examiner can use to still mean the internal rate of return. But remember, when you are using the NPV or you are using the IRR, the relevant costing principle is going to be crucial here when you are doing investment appraisal. Hence, the concept of variable cost per unit remains the same irrespective of the output level is going to apply. Number 2, the concept that overhead absorbed will not be considered in the investment appraisal process will apply. The concept that if there is a specific fixed cost or incremental fixed cost, then we will consider it in relevant cost decisions, that will also apply here. Then the concept of working capital, the rule we established was that any working capital outflow becomes an inflow at the end of the project. However, if the working capital requirement is every year, then it is important that after the first period, we on subsequent years, we look at the incremental working capital, that is the changes in the working capital. Those are the ones we're going to be considering. And you have to also understand, if they say the working capital is required at the start of the year, it means the year one's working capital will come to 0, and then year 2 will come to 1, in that order. They are incrementals. Then in the final year, the net figure will come as an inflow in the final year. So be mindful of the flow of the working capital when it comes to dealing with the net present value. Then certainly the issue about cash flows, real cash flows, nominal cash flows. We said real cash flow should be discounted using real cost of capital. Nominal cash flow should be discounted using nominal cost of capital. But we said the examiner can get a goosebump and give you whatever the nominal cost of capital, or give you real cost of capital, but you have the nominal cash flows. In that case, how do you move? We said you can use the Fisher formula to be able to move from real cost of capital to nominal cost of capital to do your calculation. Then I also emphasize something to you, that when you're dealing with the cost of capital, it is important you understand the context of the question. If there is tax in the as part of the notes, then we have to use the after tax cost of capital. If there is no tax in the question, then we have to use the before tax cost of capital. So you don't just pick the cost of capital given to you like that and start working with it. You have to find out, is that before tax cost of capital or after tax cost of capital? Because that will also have an effect depending on the context of the question, so that if there is no tax in the question, but the examiner gives you the after tax cost of capital, then you have to flip it up to get your before tax cost of capital, because that is going to be your discount factor. If not, majority of the things you have done is just useless at the end of the day. So that is the idea also about the cost of capital flow. Then the final thing has to do with the issue in respect of taxes and capital allowance or tax benefits. What we said was that when there is tax in the question, then there is going to be tax benefit. Remember, we said the tax benefit is always the tax rate on the depreciation figure. So be careful, because I told you the examiner could tell you that, oh, capital allowance is 25%. That's not the capital allowance. That is the depreciation figure. So you apply that 25% on the cost or on the carrying amount if you are using reducing method, to be able to then calculate your amount when it comes to dealing with that, and you get your depreciation. Then you use the tax rate. So to get your tax benefit, it is the tax rate multiplied by the depreciation figure to be able to get your tax benefit in that particular case. So that is the idea about the various issues that we need to understand when it comes to dealing with the NPV and the notes. Remember, not everything in the notes will or may be used, especially because we are using the marginal costing principle here. So absorption of overheads, au revoir, mesue. Apportionment of overheads, we don't care. It is only incremental cash flows that will be considered here, including opportunity cost. So be mindful and remember those principles very well. Then when it comes to the IRR, if the examiner asks us to calculate the break-even rate or the rate at which NPV is 0 or the IRR, yes, we are going to be doing two NPVs, because the IRR formula is A plus NPVA over NPVA minus NPV B, B minus A, all percent, that kind of thing. Remember, we said you're going to be doing two NPV schedules. If the examiner doesn't give you any cost of capital in the question, you start with 10%. And if you do the first one and the rate, it happens that the amount is, or the NPV you did for the first one is positive, it means that the discount factor is too high, so you're going to be increasing the discount factor for the most part. And then if it is negative, it means that the discount factor is too low, so we're going to be increasing it for the most part in that particular case. So that is the idea about dealing with the investment appraisal flow. Again, if you remember, let me show you something in our slide on the investment appraisal situation. Let's see if I can get your notes on the investment appraisal situation. I told you that, where is that? Not the question. Okay, sorry. I think the note is above here. Right, so this is also another theory, right? So all of the theories that are under the investment appraisal topic can be asked by the examiner. So you want to make sure that you understand all the theories. So problem with the discount factor method is a question the examiner can ask you. Comparison between NPV and IRR is the question that the examiner can ask you in the exam, or because it's a written thing that the examiner can throw at you. So it's important that, yes, you understand all the calculation aspects, but also you understand the theory, because the examiner can equally ask you that. The final thing under the investment appraisal is the issue about sensitivity, where we said we are putting in risk and uncertainty into the project. And so sensitivity has to do with what will happen to the NPV if the variables we use to do the calculation change, if there are changes in them. So we said our sensitivity is going to be the present value, the NPV of the project divided by the present value of the variable we are dealing with. And we said if it is a cost item, then your answer you get will be the percentage at which that cost item must rise for the NPV to be zero. But if it is a revenue item, meaning you are dealing with sales, you are dealing with scrap values, revenue items, then the percentage you get is the percentage at which that revenue item must fall for the NPV of the project to be zero. So investment appraisal is an area that we're going to be getting excited about in the exam hall, that the examiner will bring between 10 to 15 marks. And these are some of the issues that you must understand there. Yes, under each of the calculations, they have their own rules, they have their own methods, then their own principles. Then under each of the methods, there are theories there that the examiner can ask you. So you may go to the exam hall tomorrow and investment appraisal is there, but it's purely theory. Purely theory. And he has done that a couple of times, and it wouldn't be surprised if he repeated. So you want to make sure that you know all of the theories. And it's going back to what I told you, that management accounting exam, minimum of 30% of the questions will be written or comment. Minimum of 30%. So you have to understand that under each of these major topics, there are theories there that the examiner could get excited and ask you about in the exam hall. So that is the second part for management accounting as well, and the various principles that we must understand when it comes to the management accounting. Let's come back to auditing. Our third key area in auditing, it's going to be audit reporting. Again, this is 15. If the examiner gets goosebumps, he makes it 20 for you, meaning he loves you so much. But it's a done deal area, audit reporting. What are we looking at? A lot, right? So number one, we're looking at things like subsequent events, right? Subsequent events that are happening after the reporting date, but before the audit report and financial statements are authorized for issue. So the examiner can ask us questions about that. And we said that when it comes to the audit, generally, the auditor has active duty and passive duty. From the time we begin our audit till the time that we issue our auditor's report, we have an active duty to figure out everything. And when it comes to subsequent events, the auditor must inquire from management the procedures that they have put in place to identify subsequent events, and number two, to recognize the subsequent event or treat them in the financial statement. So the auditor must inquire from management what procedures they have put in place to identify the subsequent events. And we have raised a lot of discussions that some of these events, management may refuse to disclose them in the notes, because if they are non-adjusting events but they are material, they must be disclosed in the notes. Other times they are adjusting events, and hence they must be financial statement must be amended. We have said there are sometimes management will say, Mba, they're not going to do the adjustment. They're not going to do the disclosure. What should the auditor do? So you see right there, I told you something whilst we were in class, that even under audit reporting, the examiner can ask you a question about audit procedures. So if management refuses to disclose something in a note, if it is a material thing, or to adjust the financial statement because the event is an adjusting event, what should the auditor do? That is an audit procedure thing. And if you remember, we said, hey, discuss with management. Management, why don't you want to do the adjustments? Okay, management is always going to give us some, as always, response, right? But after that, the auditor must assess the materiality of the non-adjustment or non-disclosure on the whole financial statement, and I'm going to get into that in a moment. So subsequent events is an area we can have a question on. Number two, my favorite area, going concern situation. Can the entity operate into the future? But it's not the future that you know, just in the next 12 months. Can the entity operate in the next 12 months? Can the entity exist? So we spoke about the indicators of going concern issues. And I told you that yes, if the indicator is there, but management has a mitigating factor which the auditor has assessed that are appropriate mitigating factors to deal with the identified indicators, no problemo. All right. But when the auditor has doubts on the going concern assessment of the company, then that is where in the auditor's report, the auditor will include uncertainty relating to going concern paragraph in the auditor's report. But it is management responsibility to assess the ability of the entity to continue as a going concern. That's management responsibility. But the auditor also has some roles or some duties. The auditor must assess the reasonableness of management assessment of their going concern. How do we do that? By reviewing the board minutes, by reviewing the director's report, by reviewing the management accountant's reports, because the management accountant is going to prepare some cash flow forecast, some cash budget, some prospective financial information. So we review all that because that will help us to understand what management is saying that, oh, this entity can continue as a going concern. Then the auditor must also re-perform, okay, do an independent assessment of the ability of the entity to continue as a going concern. So we have that role in that particular case. And if the auditor concludes that we can't trust what management is telling us, that is where they will bring it in the auditor's report. But if there is no disagreement, no problemo, it means everything is going to be okay. There is no need to talk about uncertainty relating to going concern in the auditor's report. But going concern is an issue that the examiner can get excited about, that we must know about. Then we spoke about other information. Okay, as auditors during the review stage, during our audits, we're going to be looking at the board minutes. Okay, we're going to be looking at director's report, like the things that I mentioned a moment ago. We're going to look at the management accountant's report and all of those things. Why are we reviewing these other documents? For consistency of the assertions made by management. For consistency of the assertions made by management. For consistency of the assertions made by management. So that if the directors in the board minutes, the board approved that an asset should be bought and paid for outright. But we saw in the financial statement that yes, the asset register, the asset has gone up from analytical procedures. And when we asked management, they said, oh, we leased an asset and they have recognized a right of use and lease obligation. Yes, they have applied IFRS 16. It's okay. But there is a mismatch. Because in the board minutes, they didn't say they should lease the asset. They said they should buy it. So who then changed that decision? So it is important because the auditor will review these other information, and it's to determine consistency of the assertions made by management. So the examiner could throw in some questions about why the auditor reviews, director's report. What is the importance of management accountant's report to the work of the auditor? The examiner can ask you that, it's there. You got to know it. So that's what I'm telling you. So that's other information. Then we come to the last part, and that's going to be the audit report itself. Remember, I've told you, you're not going to be required to prepare auditor's report, but there are two things, among other things, that you'll be required to do if the examiner wants to ask you a question about audit report. The first one is the question we solved in class: critically evaluate, the audit report presented. So a draft auditor's report will be presented and you will critically appraise it. Remember the pro forma we discussed in class. We said, yes, the title is going to be there, but the audit report must be addressed to only the shareholders. From there, boom, we come to the opinion paragraph. What are we supposed to see in the opinion paragraph? The financial statements that have been audited, explicit issue about the opinion of the auditor and the issue in respect of whether the financial statement represent the true and fair view of the entity. Basis of opinion paragraph follows. Then key audit matter paragraph. Remember, the examiner can ask you, what does the auditor report under the key audit matter paragraph? So the pro forma is very key. In the key audit matter paragraph, all the auditor is reporting there is the various issues that they encountered during their audit, significant issues that they encountered during their audit, and how they responded or dealt with those issues. It is to tell the shareholders the key things that they encountered during the audit and how they responded, and trying to give the users of the auditor's report, an opportunity to bring them into their work to a little bit close that expectation gap. Because remember, the expectation gap is always wide. So how do we close the expectation gap? We close the expectation gap by including a key audit matters paragraph in our auditor's report, so that we give an idea to the users of the auditor's report. These are the key issues we encountered, and these are the things we did to deal with them, so they know what we did generally at the end of the day. So critically evaluating an auditor's report is a question that we could have under audit report. The second thing is going to be the issue about what type of opinion to be issued based on a certain scenario available. And we have 4 opinion: an unqualified opinion, everything is okay; a qualified opinion, everything is okay except a diverse opinion, nothing is okay; a disclaimer opinion, we cannot express an opinion on the financial statement. And we've stated the reasons why auditors can issue a disclaimer opinion. But we said that the issue in respect of the type of opinion is broadly divided into 2: unmodified opinion and modified opinion. And we said the suitability of a modified opinion depends on 3 things if you want to. Number 1, the materiality of the subject matter in question. Number 2, pervasiveness. Coming to write pervasiveness of the subject matter. That is how the subject matter, the susceptibility of the subject matter to affect the entire financial statement. That is pervasiveness. In other words, if the subject matter is material and is pervasive, what kind of opinion do we issue? A diverse opinion. But if the subject matter is material but not pervasive, then we issue an except for opinion. But there is a third thing, that is the ability of the auditor to obtain sufficient and appropriate audit evidence. Okay? Ability to obtain sufficient and appropriate evidence. Now, if the auditor is unable to obtain sufficient and appropriate audit evidence on a subject matter, and the subject matter is material and pervasive, which means it will affect the entire financial statement, then the auditor will issue a disclaimer opinion. So these are some of the things that we shared our thoughts on. So on the audit report side, is either we are critically evaluating, or the examiner will present us with some scenarios and ask you what type of opinion should the auditor issue in that particular case. And still, just on the pro forma of the auditor's report, remember there are some 2 key paragraphs that are included in the auditor's report that are important. That is other matter paragraph, and then the emphasis of matter paragraph. The emphasis of matter paragraph is highlighting things that have already been adequately accounted for in the financial statement, which in the judgment of the auditor, users of the financial statement must know about it. That is emphasis of matter paragraph. The other matter paragraph is just, again, other issues that in the judgment of the auditor, the users of the financial statement must know about, which has nothing to do with, or which have nothing to do with what has been reported in the financial statement. So those are other 2 paragraphs that the examiner can specifically ask you about them in the exam hall. The main thing here is, like I said, the audit report. Knowing the pro forma of the audit report and why each paragraph, what is covered under each of the paragraph. Opinion paragraph, what do we cover there? Basis of opinion paragraph, what do we cover there? Key audit matter paragraph, what do we bring there? Other information paragraph, what do we bring there? Emphasis of matter paragraph, what is brought there? And then, you know, the other one, other matter paragraph, what do we bring there? So that is the report side, the main audit report itself. So for 2015 marks minimum, 20 if the examiner gets some goosebumps. Either we're going to have subsequent events, going concern issues, other information, or audit report. Like I said, audit procedure can also be under the reporting area. If the examiner decides to do that, then you are going to have a party of 30% of the questions talking about audit procedures. And that is a gift. It's like a gift. Your dream, a gift to your dream vacation. So in the reporting side, the examiner can still throw audit procedure questions, and still we will go with our AEIOU principle. But remember, like I said, with inquiry and inspection alone, we could churn out a lot of audit procedures for the most part. So that is the third part of the examination for advanced audit and assurance, and the things that you have to know about from the principal's perspective. Okay. So that's number 3. So number 1, ethics issue. Number 2, audit procedure. Number 3, audit reporting. Let's fly over to MA. So next thing in management accounting, it's going to be the issue about short-term decisions. You know, it's a very bulky area. There are a lot of things here, and we don't know whichever or which one the examiner is going to be bringing in the exam hall. But there is a lot of material here to go through when it comes to the short-term decisions for the most part. But, you know, like I said here, we are applying the marginal costing principle, right? We are applying the marginal costing principle. So a couple of things we have to take away. All of the short-term decisions have been asked by the examiner in the last 8 examination dates. So he has asked them, right? So there's nothing like, oh, this one is outstanding. Yeah, no. All of the short-term decisions the examiner has asked them. So you can't focus. You can't narrow down. You have to know all of them. Oh, Nhyira, why can't you tell us the one that is coming so that we can nya 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 nya? There is no way you can do anything. You must learn all of them. That's why I taught you all of them. So you have to know all of them. Now, what are some of the things you have to take away here? This is where the principles comes in, right? The principles. So let's go. Limiting factor analysis. That's a first short-term decision issue. Here we are saying that the company is having a bottleneck. And it's important you understand that bottleneck or the limiting factor can be material, labor, machine capacity, a department. These are the bottleneck issues. The product the entity is producing cannot be a bottleneck. The product the entity is producing cannot be a bottleneck. So it is the resources, material, labor, machine hours, or machine capacity, or a department. Now, when the examiner presents us with a limiting factor analysis question, then how do I know it's a limiting factor analysis question? The requirement will tell you that, oh, some funny things like what is the optimum unit the entity should produce to maximize profits, or calculate the optimal profit of the company. Okay. Optimum units to maximize profits, or calculate the optimum profit of the entity. All right. Doing some limiting factor analysis. And as always, what did we say? You have to identify the bottleneck process. You have to identify the bottleneck or the limiting factor. How do you do that? You look at the difference between the resources available and the resources required to produce the units or to meet the demand for the company. So if there are two, maybe material and labor, then you calculate the material we will require to meet all the production. You compare the total to the material available. You do same for the labor. And then you'll be able to identify the bottleneck. Nhyira, what if all of the two resources cannot meet the production unit? Then you can't say the two are limiting factor. At least one of them has to be a limiting factor. So between the two, the one with the highest deficit or shortage becomes the limiting factor. That's a principle. Becomes the limiting factor. So once you identify your bottleneck, suddenly you apply a marginal costing principle. Okay, you apply the marginal costing principle. How do you do that? You know that already. Calculate contribution and then divide that by the usage per unit of the limiting factor so that you can get a contribution per the limiting factor. Then you can rank, so that you now design your production schedule based on the ranking. But there is a twist there, because under limiting factor analysis, we can also use throughput principle. Now, if we are using throughput, the difference between throughput and marginal costing is that in marginal costing, we are maximizing contribution. But in throughput accounting, we are maximizing throughput. In marginal costing, we said contribution is selling price minus variable cost. And the variable cost here is both production variable cost and what? Non-production variable cost. That's how we get our contribution. But in throughput, we said that in the short term, the only cost that is variable is direct material cost. So throughput is equal to selling price minus direct material cost, because under throughput, all other costs are treated as factory cost, period cost, or fixed cost. So in the limiting factor analysis flow, we can have a limiting factor issue, but the examiner can ask us to use the throughput principle, in which case we will bring selling price minus direct material cost to get our throughput. Then you divide that by the usage of the limiting factor per unit to get the throughput per unit. Then you rank. Then you design your production plan. Then based on that, you then calculate your maximum profit. So that is the limiting factor analysis principle. And as you can see there, organically, I brought in the throughput principle. So throughput accounting ratio is also something that the examiner could ask us to calculate. And that is the return per factory hour over cost per factory hour. And you know how to do the calculation for the throughput already. Make sure you remind yourself on that. But most importantly, is going to be the interpretation of the throughput accounting ratio. We said anything above 1 means the product is profitable. We should continue to produce the product. Anything below 1 means the product is a loss-making product, so the entity should shut it down. Then anything that is exactly 1 means we need further investigation. But we said we are management accountants. You don't just get up and say, because the throughput is less than 1, we should shut down that product. So what are the ways to improve the throughput accounting ratio of a product? That is a theory for 5 marks. between 3 to 5 marks that the examiner can throw at you. We said the trick in that is we should just modify all the variables we used in the calculation. So what did we say? Increase the selling price. But you don't just get up and increase selling price. It depends on the market you are in. If you're in a perfect competitive market, you cannot increase price because it's a perfect competitive market. If you're in a monopoly market, yeah, you can increase price. People will still buy because you are the only seller there. But you have to also consider the elasticity of demand of the product, because if the elasticity of demand of the product is elastic, then increasing price means there will be a higher fall in the demand. But if the elasticity of demand of the product is inelastic, it means that, when you change the price, there will just be a small change in the quantity demanded. So you don't just say increase price. You have to explain them like that. Then the direct material cost, the entity can negotiate or find ways to reduce the direct material cost by maybe using alternative raw materials, changing their suppliers, buying inventories in bulk to enjoy quantity discounts, and all of those things. Then the other factory cost, they can find ways to reduce all of them. So that is also the idea about throughput accounting. It's a short-term decision flow that the examiner can present to you in the exam hall that you have to know about. Then you heard me say this a moment ago under the throughput, and that is shutdown decision. You see, I'm just trying to draw your attention to the fact that although it looks like there is a lot of things under the short-term decision, like they are in a way having some relationship and connections. And the shutdown decision, the company is deciding, hey, this department, this division, should we close it or keep it open? All right. What is the principle here? Simple. We look at the relevant cash items. Okay, if we close down this division, what will we lose? So we compare lost revenue or lost contribution with how much cost will we save by closing the division. That's all. That's the decision rule and the shutdown decision. We compare. How much will we lose? How much can we save? If we will save more cost than the lost revenue, shut it down. But if we lose more revenue than the cost we will save, don't close it. So that's a shutdown rule. Very nice, simple, straight to the point in that case. In line with shutdown, then we come to the make or buy. Okay, we have a product. Should we make it in-house or buy it from outside? All right. What do we do? It depends. If the entity has unlimited resources, then in that case, we just look at the marginal cost of making the product in-house to the buying price. Then, boom, we make the decision. The marginal cost of making the product in-house and the buying price. Fixed cost will not be relevant here. Principles. So if the entity has no limitations on the raw materials, on the resources, then we just look at the marginal cost of producing the product and the buying price. If the buying price is more than the cost of the marginal cost of producing the product, go buy. You produce in-house. But if the buying price is more than the marginal cost of making the product, make it in-house. But if the buying price is less, then you buy it from outside. But number two, if in the make or buy, the entity has limited capacity, limited resources, then we have to be careful, because in such environment, the make or buy decision would have to be made based on the cost saving of making the product in-house per the limiting factor, per the usage of the limiting factor. What does that mean? It means that here, when there is limited resources, we're going to look at the marginal cost of making the product and then compare it with the buying price to see, okay, how much cost savings do we have when we make it in-house? Then we'll divide that by the usage of the limiting factor, so that the product that will give us the highest cost saving of making the product in-house per the limiting factor will be made first with the limited resources, so that the ones we can make in-house based on the one giving us the highest cost savings per the limiting factor, if we make it in-house, we will make them, then the rest will be bought from the outside, from the supplier. That is the idea about make or buy. Again, we are applying the marginal costing principle. So limiting factor analysis, flowing in, we can apply throughput accounting principle there. We can be asked to calculate the throughput accounting ratio itself. Shutdown decision, should we close it down? What are we looking at? Make or buy, should we make the product in-house or buy from outside? What are we looking at? Then suddenly, we then come to the OG, break-even analysis. Right? Break-even analysis. This is the OG because it's like that is the examiner's favorite. I mean, for the most part, he has said a lot of questions on break-even than all of the other methods generally. So break-even is like his favorite area. He has brought it over and over again in that case. But when it comes to break-even also, we're going to be applying the principles here, knowing how to calculate margin of safety, knowing how to deal with the break-even point in units, break-even point in value, knowing how to deal with the break-even in a multiple product environment, the calculation of the break-even point in value for multiple products, break-even point in unit for multiple products. All these formulas and principles, you must understand them very well when it comes to break-even analysis. Certainly a lot of issues there, but the marginal costing principle will be at a center stage when it comes to that area. Then we have some written parts like outsourcing decisions. That's a theory area coming in. And then pricing decisions. So a lot. Outsourcing decision is about, all right, what factors should an entity take into consideration before outsourcing? So they have decided to shut down, or they have decided to go and buy a product outside. Okay, what factors do they take into consideration in selecting a supplier? Certainly the quality of the supplier, the reliability of the supplier, the capacity of the supplier. I mean, we can consider the lead time of the supplier, because all that is very important. We can even consider the other issues like privacy, confidentiality, patent loss, and all of those things can be considered. Pricing decisions, there are a lot of pricing methods: cost plus pricing, penetration pricing strategy, scheming pricing strategy, discriminatory pricing strategy. All of those guys, pricing decisions is a theory area. You know about it. The examiner can ask you, these are the things about short-term decisions. So it's a lot. Yeah, I know it's a lot, but so how many of them will be in the exam hall? At most one. Yeah, at most one of them will be in the exam hall. Which one? Tomorrow morning 9 a.m. when you get to the exam hall, ask the examiner, which short-term decision are you bringing? And you will see it on the paper. Okay? But you have to understand the principles underlining each of these short-term decisions. Like I tell you always, don't see it as, hey, this plenty thing. How can I? No. Know the principles, as I have discussed with you. If I'm doing shutdown, what am I looking at? If I'm doing make or buy, what am I looking at? If I'm doing throughput accounting, what am I looking at? If I'm doing limiting factor analysis, what am I looking at? The principles, as I have discussed with you right now, the principle, that's all you need. There is no shortcut here. Some of you wish that, you know exactly what is coming so that you can learn that and go and do it. No, if that, then it's not exam. If that is not exam. So just learn the principles underlining each of these things. Go to the exam hall, boom. You know what to do. And I nearly forgot my favorite one. Relevant cost analysis. I don't know why I could forget that guy. Relevant costing. That's my favorite one. I mean, if your English is not good, there and there you have failed the exam in advance. Relevant costing analysis. If your English is not good, like you've already failed the exam in advance, so you just have to prepare yourself. But relevant costing analysis is also there. That also has also been asked by the examiner about 2 or 3 times. I mean, it's an area that is primary to the management accountant's job, because when we receive a one-off order, a special contract, and all of those things, we have to find out how we can price that. And to determine how we can price that, we use the relevant costing principle in that particular case. And all these, we are using the marginal costing principle. So for all these, one of them will be in the exam hall. If the examiner gets goosebumps, then he's going to bring 2 of them. One will be calculations perspective, the other will be a written part. Combine 15. If he gets excited, 20. That's very rare though, but he can get excited and make it 20 for you. That means, again, you have a gift card to go and shop at Melcom and chill. But that is shutdown decision, the various things there, and the principles. Remember, if it is relevant costing that is coming, like I said, you pay attention to the context of the question. Read very well, because in relevant costing, again, we are using the marginal costing principle. So we are only dealing with future cash flows, incremental cash flow items, anything that is a sunk cost, a historical cost, committed cost, absorption of overheads, apportionment of overheads. All of those guys will not be considered. So you got to be careful. And that is the third issue, short-term decisions, and the key principles underlining each of these short-term decisions. 15 marks or 20 if the examiner gets excited with you and wants you to have some party in the exam hall. Then he could make it 20, bring 2 of them. One will be calculation, one will be written part. Then we're done. So that is short-term decisions and the principles underlining each of the short-term decisions. Let's flip back to auditing. So auditing, we've spoken about ethics, spoken about audit procedure, spoken about audit reporting. Number 4, it's going to be public sector audits. Public sector audits. It depends on the examiner, but between 10 to 15, 10 to 20 max. The reason I said 10 is that I've realized that there are certain examination dates. The public sector audit is only just a 10 marks question that the examiner will bring, has brought in a couple of I think 2 examination dates or so. But for the most part, it's going to be like 15, 20 in the exam. Also between 10 to 20 marks on public sector auditing. There is a lot going on here when it comes to the public sector auditing that we need to understand, but there are key highlights that we have to really, take away as well here if we are going to be talking about public sector auditing. Certainly the types of public sector audits, right? Types of public sector audits, the clue. Performance audit, the type of audit undertaken after a covered entity or a project has been executed. That is performance audit. What are we looking for? We are looking at whether the contract was awarded following the Public Procurement Act and the guidelines from the Public Procurement Authority. Number 2, we are looking at whether the project was executed to the required specification. And then number 3, we are looking at whether value for money was achieved on the project. And so I told you the examiner can specifically ask you about value for money, 10 marks area in the exam hall in public sector audit. Why is value for money so important in public sector audit? Economy, efficiency, effectiveness, value for money, performance audit. Compliance audit. What did we say? We said here we are looking at whether the entity's activities and operations are in line with the acts or laws that establish or enacted those, yes, the laws that establish the entity, their own internal controls. Are their operations adhering in accordance with these internal controls? And then number 3, guidelines from the Minister of Finance, Controller, Accountant General, Auditor General, are they following it? So the entity's operations, are they in line with the laws that establish them, with their own internal controls, and with the guidelines issued by Ministry of Finance, Controller, Accountant General, Auditor General? That is compliance audit. Then the last one is financial audit. This is where we are auditing the financial statements, and we said in financial audit we're going to bring a major issue in respect of the two situations, and that is where we're going to be talking about both the issue about compliance audit and then performance audit as well in that particular case. And that is very important for us to know about. So the types of audit, make sure you have them handy. Value for money, make sure you go through that. Then we mentioned the roles of key public officers and institutions. The examiner can ask us a question about that, so I told you to read on that. The boss himself, Auditor General, Public Accounts Committee, the Internal Audit Department, then people at the Internal Audit Agency, their roles, okay, when it comes to public sector auditing, value for money and all that. It's a question that the examiner can access when he talk about public sector auditing. Then outsourcing issues, like the question we solved in our mock, if you remember. What factors should an audit firm consider before accepting an engagement from the government to do something? The discussions we had in our mock discussion, those kind of questions, and the procedures we undertake. So remember, audit procedures can be here as well. Audit procedures can be here, just like the question we discussed in class. The examiner can ask us, maybe whatever, let's say the National Cathedral that is going to be commissioned on the 6th of March 2024. We are hoping that it will be commissioned. Let's say they could be commissioned now, they has been suspended and all that. So let's say the examiner brings a scenario that, our audit firm has been appointed to look into the National Cathedral nonsense and find out what happened on the National Cathedral. Okay. Number 1, what factors should we take into consideration before accepting such engagement? Number 2, if we accept that engagement, what procedures do we undertake? So those specialized issues, the examiner can throw some questions about them. Remember what we discussed in class? It was about oil, something. So there are other various activities that we could invite a private sector firm to come and audit. The Japa deal. Let's invite a private sector audit firm to come and look into that, another nonsense in that particular case. Let's come and see what is going on in that regard, or something like that. So outsourcing, public sector auditing, what factors do we consider? How do we audit these things? The examiner can ask us questions in respect of those areas, and we have to be mindful of them as well. So types of public sector auditing, value for money, roles, outsourcing, and those other issues that we discussed, because remember we said whatever we discuss under the private sector is the same thing happening in the public sector in terms of acceptance of engagement with a level of contextualization, materiality level, the audit procedures, the sessions we are testing for, even the audit report. Everything is going to be the same thing as the private sector, only that in the private sector we are using the international standards on auditing, the ICAG, but then in the public sector we are using the INTOSI to be able to carry out our audit in that particular case. So public sector auditing, between 10 to 20 marks. The examiner can get excited And these are a number of things you want to keep in your mind as you walk into the exam hall. And like I said again, for the most part, most of these topical issues under the public sector audits have been asked by the examiner in the last 8 examination dates. So in March 2024, as you go into the exam hall tomorrow, the examiner is just going to throw one thing like that under the topical issue with a different contextualization of the question, and you should be in the position to be able to provide an answer to that in the exam hall. And that is what we must understand when we talk about public sector auditing, between 10 to 20 marks waiting for us in the exam hall. Then we flip to the fourth area for management accounting, and that's gonna be budgeting. Right? Budgeting. 10 marks minimum, 15 maximum. Budgeting. Again, it depends on the context of the question, but there are a lot of theories in budgeting. I've told you that during our revision session. So theory areas, you got to be mindful of that. I mean, the importance of budgeting, very important. The methods or approaches of budgeting. The examiner can ask you that. Incremental budgeting, zero-based budgeting, activity-based budgeting, and all that. Theory areas, the examiner can ask you about that. Then other issues in respect of the processes involved in the preparation of the budget. So theory issues, the examiner can go there. So you can go there, there's a budgeting question, but it is purely theory or written area that the examiner will throw at you in the exam hall. So you got to be mindful of the theories. I hope by now, with the various issues I've told you and the cautions I gave you throughout, I hope by now you have read all the theories, because again, man accounting, minimum of 30% of the questions will be theories. Minimum. When we finish like that, we then come to the calculation issues in budgeting. And this is going to be a straight jacket. Either we are going to be dealing with a functional budget situation or a master budget situation. That's all. Either a functional budget or master budget. Functional budget, we are looking at, okay, the sales budget, the production budget. Remember, when you're preparing the production budget, you have to take into consideration defective output. When you're preparing the material usage budget, you have to take into consideration wastages or normal loss if it is built into the question, the scenario like that. Okay, then you come to the labor budget. If you are doing the labor budget also, you may have to take into consideration bonuses and overtime also, and then the issue about efficiency of labor and the issue about idle time. All of these things are things that you have to understand when we talk about the preparation of those functional budgets. The functional budgets are the budgets of the various departments within the organization. Once we are done with the functional budget, we can come to the master budget, where we are preparing the cash flow budget, an area that the examiner has enjoyed bringing question in about 3 or so examination diet, the preparation of the cash budget, because it's interesting. It brings a lot of things out of the examiner that he wants to test students on. Again, if your English is not good here, you're going to screw it up and get 0, literally, here. Because if you miss the English, you miss the context, you miss the progress, you miss the way the things are stated, you're going to screw it up and get 0. Because chances are, if you miss one step, it's going to carry you through and you're going to miss almost everything later. So preparation of the master budget, the cash budget preparation, then the budgeted income statement and the budgeted statement of financial position. Note that when we are preparing the cash budget, we don't bring in non-cash items like depreciation, amortization, provisions, impairments, What else? Yeah, those non-cash items are not brought in the preparation of the cash budget. But if you are preparing budgeted income statement and budgeted statement of financial position, depreciation will be valid. Um, Amortization could be valid. Bad debts could be valid. Provision for bad debts could be valid in that regard. So it is important you know the various things that you have to take into consideration when you're preparing each of the functional budgets, and the various things you need to consider if you come to the master budget. Like I said, if you're preparing the production budget, be mindful of defective output and the way the calculation is done. If you're preparing the material usage budget, be mindful of the way we deal with normal losses or wastages and how the calculation is done, because that is going to be crucial. Because remember, if you screw up the production budget, your material budget will be wrong, your labor budget will be wrong, your material purchase budget will be wrong, your labor cost budget will be wrong. Literally, it means you got zero. That's how challenging the functional budgets are if we are going to flow like that. Because once you screw up the production budget, everything else is going to be screwed up. There's no way out. You're going to screw up everything because everything rises and falls on the production budget. So you screw up the production budget, forget it. You get zero for the work that you did for Mother ICA. In the master budget, when it comes to the cash budget preparation, as always, you're going to go step by step like that. But most importantly, reading the language or reading the statement and understanding what you are supposed to do. And then when we are talking about issues in respect of debtors, you must know how the collection periods are, how the calculation is supposed to be done. Remember, there are two ways that thing can be asked. Either we will go with the default approach where they say, oh, sales is made 50% on cash, 50% on credit. Okay, the credit is collected 20% in the month of sales, 30% the month after that, 20% the month after that, and then the remainder is written as bad debt. That's the default or the classical way. But there is another way which we solve a question about that as well, where we are not going to be giving anything about, oh, this is how we collect the money. So in that case, we have to prepare the control account by bringing in the opening debtors figure, adding the sales for the period, then bringing the closing sales figure, closing trade receivable, then the balancing figure becomes the cash we receive from the customers. So these are the principles and the issues that you need to understand when we talk about the calculation aspect of budgeting. Minimum 10 marks, maximum 15 marks. Either the examiner will go all theory with you, or he will go calculation 10, theory 5 in the exam hall. But for the most part, there is a 90% chance that there will be a written question on budgeting in the exam hall. Last semester, I was showing you the script of last semester also, and the budgeting question was over, theory budgeting was over 10 marks. Theory budgeting was over 10 marks, plus a calculation question on the budgeting. So sometimes the examiner can get some wonderful goosebumps and decide to just like bring more than required from a certain topic. I don't know, but it is his dance. So you don't want to take any portion of the syllabus for granted. Know all the theories under each of the segments and know the principles underlining each of the calculations as well. That is the idea about the fourth segment of the management accounting exam. The theory part, importance of budgeting, method and approaches of budgeting, some behavioral aspect of budgeting, then the calculation part, functional budget preparation, know the rules underlining each of the functional budgets, like I've mentioned, and then the master budget preparation, understand the things that we have to take into consideration. But that is the fourth aspect, budgeting. Budgeting. Then we flip over to audit and assurance, advanced audit and assurance. So again, ethics, audit procedures, audit reporting, public sector auditing. Then we come to the other areas generally. Number 5 is going to be something on non-assurance services, right? Non-assurance services. 10 marks minimum, 15 maximum, depending on how excited the examiner is. Non-assurance services, and you know about these already. Here we're talking about due diligence, right? We're talking about forensic auditing. Whatever the heck. We're talking about bring it up. Agreed upon procedures. Agreed upon procedures. Right? We're talking about due diligence. We're talking about PFI, prospective financial information. That's also there in that particular case. So non-assurance services can be there. Social and environmental auditing. And we've discussed all of these things. One of them will be in the exam hall. Which one? Tomorrow when you get to the exam hall, you can ask the examiner. But remember what I told you, 2 things you are taking away from here. Number 1, what factors will an entity consider before accepting any of these engagements? So if it is due diligence, what factors do we consider? If it is forensic auditing, what factors do we consider? If it's an agreed upon procedures, remember I told you that the agreed upon procedure is where the client entity calls you and they tell you something specific they want you to do for them. That's why it's called agreed upon procedures. So maybe it is something specific that they are dealing with. Oh, maybe their IT system, they want an audit firm to come and look at the IT system to see whether if transactions are recorded on one part, it ends up very well and everything is working efficiently and effectively, and they don't have internal auditors, because that's primarily internal auditors' job, but they don't have internal auditors, so they could call an external audit firm to come and do that job for them. That could be an agreed upon procedure. Or the entity is undertaking a year-end inventory count, but they don't have the capacity in-house to do the inventory count. Agreed upon procedures, they can invite an audit firm or appoint an audit firm to come in and help them. What do you want us to do? We want you to help count the inventory, value the inventory for us, and find out how we can carry the inventory in our books. It's called agreed upon procedures. So that has no formula. It is what the client entity wants. If we have capacity in it, we provide them with the service that they want. It's an agreed upon procedure. PFI, prospective financial information. Here, like I said, in class, we are being asked to review a financial, a cash flow or a projection or budget or forecast of the entity. What factors do we take into consideration? So 2 things under each of these things here. What factors do we consider before the appointment? Remember I said the generic points you know about will come here. But in addition to writing those generic points like, resource availability, independence, the purpose of the engagement, what type of reports is expected to undertake, like those things, right? Those things generally. And so you need to understand the generics, resource, qualification, purpose of the engagement, what type of reports are they talking about, our level of independence, and all that. So what factors do we consider? That's one part. Then the second part is how do we actually do it? So that is the procedure. And we've discussed each of these items, how we go about due diligence, the aspect of due diligence, forensic auditing, what are the areas that it applies. We spoke about a lot of them, that it's going to apply in a due diligence issue. It's going to be applied in fraud investigation. It's going to apply in an insurance claim situation, and it's going to apply even in divorce issue, where we spoke about the fact that, hey, if some people are getting divorced, we will bring a forensic auditor in to come and look at all the properties, because for the most part, 99.9% of the time, women will build properties, but to put it in the name of some other people's, so that in case there is divorce, they won't have to lose anything. But men, because we don't have blood inside us, men will build a property and they will put it in the name of their children or in the name of their wife. And every day the woman will say, oh, please hurry up, make sure you build this house for us, so that if you are not there, I can take it. So literally the woman is killing the man ahead of time. Why do women do that? But that is just by the way. So in a divorce case, forensic auditors will be appointed to go behind the scene and identify properties of both the husband and the wife, so that we can know how we will do the distribution. So in each of these scenarios, the examiner can bring a question up to you and ask you how the auditor will go by each of these. So non-assurance services, one of them will be there for the most part as per the examiner's culture in the past or behavior in the past. Minimum of 10 marks area waiting for us in the exam hall. You need to understand. My takeaway here is the two things I said, which I have repeated 3 times. One is, what factors do we take into consideration before accepting any of these engagements? And then 2, how do we carry out this engagement? That is the context of the question if the examiner is going to be coming in for you on these non-assurance services. So this is the 5th thing we have to understand when it comes to the non-assurance services, which is in the advanced audit and assurance. Then we go to the 5th thing in management accounting, and that is going to be variance analysis. Variance analysis, standard costing and variance analysis. A lot of theories here that the examiner can ask you on. Again, by now, I hope that you've read the theories. What kind of theories do we have available here? Number 1 is the objectives of standard costing. Number 2 is the types of standards. A very common area that the examiner can bring very easily. Types of standards: ideal standard, current standards, attainable standard, types of standards. And then the issue about, so the objective, the types of standards, and then the importance. Okay, objectives will go with the importance generally, because you just flip up the points to write the other. So objectives are important, types of standards, and then certainly reasons why a certain variance will be favorable or adverse. It's a theory area. And what the entity is going to do, which is going to be behavioral aspect of variance analysis. So if the material price variance is adverse, what should the entity do? That is a behavioral aspect of variance or standard costing and variance analysis. So there is a lot of theories here that the examiner will have in the exam hall and bring. There is a 95% opportunity or probability that one of these guys will be in the exam hall when it comes to the theories and the variance, because the examiner would want to bring some theories there plus the calculation aspect. The calculation also, the examiner has various ways he can go through when it comes to the calculation aspect of the variance. Various ways he can bring. Number 1 is to talk about the basic variance. Okay, so when I'm calculating the direct material usage variance, that is based on what? The actual units produced, taking into consideration the actual material used or purchased. And so if you remember, we solved a question in class where there was opening stock of material, closing stock of material, and the material purchases. And so we calculated the material consumed. The reason we solved that question in class was because that style of question hadn't been asked before by the examiner. like I've told you and I keep on telling you, going over the past questions, I wouldn't say is useless, but it has no fruit. There is nothing in the past question contextually that will be in the March 2024 examination. Nothing. Nothing. So it is about understanding the principle and knowing what style of questions that is left. That is why I always tell you, you are better off looking at the ICAG question bank or looking at questions from other sources when you are learning, because solving ICA past questions, again, like I said, it's not that it's useless, but there is no context, there is no statement, there is nothing that will be brought in the next examination. That sometimes question the things that you are doing, and if somebody tells you something, question it with your own intelligence. Take the past questions, you realize that yes, topically the topics are there, but contextually on questions, the questions are always different. So why are you wasting your time on that when you are supposed to look at questions from other sources? So it is the context of the question and the way the examiner could put the question. That is why we solved that question in class, because that type of question hadn't been asked before by the examiner. I just want to rehash that, although for some of you it's already late, because after this video you are going to look at November 2019 or March 2023. I don't know why, but keep on. Keeping on. We are praying for you. Everything will be okay. Then when I'm calculating material price variance, that is going to be based on what? The actual material bought. The actual material bought. Then if the entity is using more than one raw material, what do I need? The mix variance and the yield variance. Remember, we said when we are in the mix variance, what do we need? We need standard actual quantity in standard mix, actual quantity in actual mix. So the deal is that just bring the actuals under the actual quantity in actual mix, add the total up, pick that same total and bring it under actual quantity in standard mix. Then you now use the standard ratio to share that actual material. Then you get your difference. You multiply that by the material cost, standard material cost per kilogram or liters, whatever it is. Then you get your variances. In the yield variance, we can do for individual, and that is you're going to bring your actual quantity in standard mix, then you're going to be standard standard quantity in standard mix. Then you get your difference. Then you can also do the yield variance in total. These are principles that you have to follow. Remember, all the two style of the basic questions have been asked by the examiner. That is the normal way or the reversal way. And we've solved questions about all of these things. All these have been asked by the examiner before. The normal way and then the reversal approach, where either the examiner gives you the adverse the variances and then the actual, then he will ask you to find the standard. That's what he has brought. But the examiner can also give us the variance and he will give us the standard. Then he will ask us to do the actual. And no fan bad. But that is also a question the examiner can ask you. When I come to the labor variances, direct labor rate variance depends on the number of labor hours we paid. Direct labor efficiency variance depends on the actual hours worked, taking into consideration the actual unit produced. Then, if there is a difference between the hours paid and the hours worked, what do we get? Idle time variance, and always idle time will have an adverse variance. But we can come to the second part, overhead variances, and the examiner has done this I think twice or so, where he is just centering his discussion or his exam around overhead variances. Remember, when it comes to overhead variances, you have to know which environment the company is in. Are they in the marginal costing environment or the absorption costing environment? Principle wise, the type of overhead variance we calculate depends on the environment. If you are using absorption costing, then we are going to be dealing with fixed overhead expenditure variance, fixed overhead efficiency variance, fixed overhead capacity variance, fixed overhead volume variance. But remember, the overhead volume variance is the addition of the overhead efficiency and the overhead capacity variance. These are all principles. These are all principles that you need to know about. If we're in the marginal costing environment, all we need is the fixed overhead expenditure and fixed overhead efficiency. We're done. We're done in that regard. For variable overheads, again, depending on the environment we are in. So overhead variances, the environment will play a key role. So either the examiner will bring a generic question, then he will ask you to just walk through and calculate all the variances from the basic to the overheads. And then the third one, the sales variance. We have the sales price and the sales volume. The sales price is simply based on the actual units sold. How much we have sold it for, how much did we actually sell it for. That is the sales price variance. But we have the sales volume variance. That is simply the difference between the budgeted sales unit and the actual sales unit. Now you're going to get the difference there in units. But that difference in units must be taken at the standard profit per unit if we are in the absorption costing environment, or the standard contribution per unit if we are in the marginal costing environment. So when it comes to the sales volume variance, you have to pay attention to the environment we are in. That's very important. So basic variances, know the rules. Overhead variances, know the environment. If the question is quiet, we know the standard environment is going to be the absorption costing environment. But if the question is not quiet, then the examiner will tell you which environment which costing method, the costing system the entity is using, marginal or absorption, and that would then influence the way you calculate your overhead variances and the way you calculate your sales volume variance. Principle. Then the last thing on the calculation front is the preparation of the operating statement, which we said is also going to be based on, it's also like a reconciliation statement. Remember, the way we prepare the operating statement also depends on the environment we are in. If you're in a marginal costing environment, the pro forma is different. When we're in the absorption costing environment, the pro forma is different. So when I told you in the beginning, when we started, I told you that whether you like it or not, these costing techniques, marginal costing, absorption costing, you need them to excel throughout the syllabus. And you can see throughout everything we've walked through, marginal costing, absorption costing, it's coming up somewhere. And that is the deal. And that's how you pass the examination. So these are the things about variance analysis. On the theory side, objective importance, types of standards, reasons why a variance is favorable or adverse, behavioral aspect of variance analysis. What do we do if a variance is favorable? What should we do if a variance is adverse? What measures should an entity put in place? All these are behavioral aspect of variance analysis that the examiner can throw at you, and it is important you understand them very, very well. So that's our fifth area, variance analysis. And so if we go back, key issues, cost classification, using of high and low method, the costing techniques, marginal absorption, ABC. Whether I like it or not, these principles are going to flow throughout the exam. Either we'll have a dedicated question on them to use them, or it will flow through. Question 1, performance measurement, the things we consider. Second part, investment appraisal, we have explained the principles. 3, short-term decisions, we've discussed all the principles here. We said one of them will be there. 2, one will be theory if the examiner is excited. Budgeting, the theory part, the calculation part, we've discussed the principles. 5, variance analysis, the theory part, calculation part, we've discussed the principles. So let's go back to the final part for our audit and assurance people, number 6, and that is going to be the other issues, which is going to be 10 probably to 15 marks in the exam hall. And this is going to be any other issue that we couldn't classify under each of the 5 issues we spoke about previously. So money laundering, professional liability, acceptance of engagement, quality control, all those guys are other introductory issues that the examiner could ask us a question about. Money laundering, professional liability. Again, it's a bulky area. I mean, there are a lot of things there. So, I don't know, by now, she would have focused on those 5 areas already. So, you can cruise around tomorrow in the morning in some of these things. They are very simple to read, and we have discussed most of them as well. So, money laundering, professional liability, quality control. Remember, when we talk about quality control, we are talking about Harlem, right? Harlem, human resource, acceptance of engagement, leadership, that's the culture within the company, ethical issues, monitoring, all that. So these are the elements of quality control. And I told you that there are 2 ways the examiner can set the question. Either there is a new audit firm who is seeking to put control systems in place, and so what should be included in there? 10 marks. Or the question we discussed in class where the organization already has some control in place. We want to assess whether the controls are there, which ones do they have, and what can they do about what they have generally in that particular case. So quality control is an issue there on the introductory aspect. Then acceptance of engagements. Remember, when it comes to acceptance of engagement and engagement letter, okay, engagement letter. So these are some of the things. So acceptance of engagement, remember, under acceptance of engagement, we are applying 2 things. ISA 210, agreeing the terms of an audit engagement, and ISQC 1, about the fact that, hey, management should accept that they are going to be the ones to prepare financial statements. Number 2, managements are the one who are going to be responsible for designing effective and efficient internal control systems, put those in place, and all of those things. It's not our duty, it's management's duty in that regard. Then in the engagement letter, you must know the elements that must be included in the engagement letter. And then as part of the acceptance of engagement, communicating with the outgoing auditor. What do we discuss with the outgoing auditor? It's a question that the examiner can throw at us in the exam hall, and it is important you understand that very well. So these are going to be the other issues that the examiner will throw some 10 marks question on in that particular case. By the time you get to this level, like the 5 conc areas that we have spoken about, ethics 10, audit procedure 20, audit reporting 15-20, public sector audits 10 to 20, non-assurance services 10 marks coming in the exam hall. By the time you get to this area, I mean, you are just wrapping up in that particular case. But these are some other issues that the examiner can throw some questions at us because they are in our syllabus and we must know about them in that case. So that is the 6th issue. Just other issues in the syllabus that we have to know about and the key things that we have to take into consideration. So that's our 6th thing. Stay with me. I'm going to wrap up on the auditing in a moment. Let's go to the final part also for the management accounting. And this is where we talk about, we've spoken about everything, the topical issues, everything already. But this is where we talk about models of evaluation, right? Models of evaluation. And you remember the things we spoke about there, right? Benchmarking, environmental accounting, those guys, value chain analysis, total quality management, just in time system. Those models of evaluation, one of them will be there. If the examiner gets goosebumps, two of them will be there. Plus ethics. Remember we spoke about ethics as well. It's been a while since the examiner brought ethics in the management accounting examination, but we've discussed it, and it's an area you should be also looking at, because probably the examiner would want to, do some magic coming March 2024. So the ethical issues, management accounting, it's important you understand them very well as well. And these are some of the other issues that the examiner will throw at you in the exam hall. And that's also all about management accounting. We're done on management accounting as well. So let me wrap up, give a final guidelines on advanced audits. Then we'll come to management accounting, give a final guideline, and then boom, we go away. But if there are any questions, something specific, you can put it in the chat for me, or you raise your hand. I bring you up, those of you on Zoom, and you don't have, if you have a good background, fine. Because if your background is not good, then you can put it in the chat for me. I'll be providing with some answers. So, AAA people, I have talked to you in the class. You know your problem. You know what you are supposed to do. I just want to remind you again. Number one, read the questions thoroughly. Read all the questions. Oh, Nhyira, it's a time wasting to read all the questions. Oh, I can't read all the questions. Oh, Nhyira, I didn't even see that this thing was there. Oh, yeah. Take that same attitude to the exam hall. Just take that same attitude to the exam hall, and you will see the outcome. So please, don't let anything come over you. Read through all the 5 questions before you start work. Because some of you will get to the exam hall and the Lulu will set in. You see question 1, you read it, no, oh, start work, then you start writing. No. Read all the questions. It's not a waste of time. It is intelligence. It's brilliance. It's wisdom. Because the dumbest experience you can have is to leave the exam hall, pick the question paper, and realize that there was a 10 marks question somewhere, 15 mark question somewhere that you didn't see, which you had learnt and you knew. And like I say always, by that time you know you have failed the exam. Only that you can't own it up. You can't own it up. But deep in your heart, you know you failed. To avoid that feeling, please, I beg you, in the name of God, read all the questions thoroughly. When I say that, what I'm saying is that in the 15-minute reading time, go to the requirements of the question. Go to the requirements of the question to try to have an idea of all of the requirements. All the requirements. If the 15 minutes is not enough and they say start work, don't be in a hurry. It's not a race. Don't be in a hurry. Take your time to read through all the questions. Why? Because you want to start with what you can do best first. Okay? Start with what you can do best first. We know ethics is going to be there. If that is your strength, go for it. We know audit procedure is going to be there. If that is your strength, go for it. We know audit reporting is going to be there. If that is your strength, go for it. We know public sector auditing is going to be there. If that is your strength, go for it. But how do you know where the questions are? By reading all the questions. Step number 1. Then you start with what you can do best first. Please work on your grammar. And then keep it simple, sweet, straight to the point. This is not a script for Hollywood movie. This is not a script for the next Kumawood movie or the next blockbuster movie. No. Keep it sweet, simple, straight to the point, taking into consideration the guiding principles that I have told you about in class and I have gone through today. If it comes to ethics, how do you write your answer? If it comes to audit procedures, how do you write your answer? If the examiner asks you about issues in respect of audit risk and the auditor's response, it's part of the other issues. How do you write out your answer? Work on your grammar, keep it sweet, simple, straight to the point. Number 4, discipline. I want to say time management, but you can't manage time. Okay? So although that's what you will call time management, I will say discipline, put into bracket time allocation. You want to work on that very well in the exam or as you go. You can't manage time because the time we've used for this session, it's gone forever and ever. You can't do anything with it. So you cannot manage time. What you need to do is to discipline yourself and allocate time very well. If you realize that you are spending more time on a question than required, stop it. Because chances are you are writing nonsense. Stop it. Go find out about another question. That is why I'm saying take your time and read through all the questions well, so that you start with what you can do best first, because that way you are building momentum. You are building momentum. You are building momentum. You can't start the exam and just 30 minutes inside, you start thinking, hey, this thing, 30 minutes? And you are screaming like you just ran from Ghana to Ethiopia? Come on now. So you discipline yourself. Allocate time very well. The last thing that I know you're not going to do in the exam hall, but I'm going to tell you anyway, make sure you review the work before submission. So get ready to stop work. I don't care what the heck you are writing. Drop your pen. And you want to quickly scan read what you have done. Because remember, your brain is saying something, but that may not be the same thing your pen is writing. And most of you have experienced this when we were going through your scripts during the session of the class when we were doing assignment and performance evaluation test. And you now later on you wonder and say, was I the one who wrote this nonsense? Yeah, you were the one. But your brain was telling you were saying something else, but the pen was reproducing another thing. So this is my recommendation. Get ready to stop work, drop the pen. I know you won't do it, but I'll tell you anyways, because I want the heavens to take notice that I told you what you need to know about. Review your work. So you want to drop the pen and scan read quickly, because if you miss an article, maybe there is an, or the auditor should. If you miss something like that, everything you've written is garbage. Everything you've written is nonsense. Everything you've written is absolute wrong, mistake. So review your work. Like I said, I know you're not going to do it. I know. You won't do it. Because if people review their work, they won't write the kind of English they wrote that the chief examiner has to complain about every time. I know you're not going to do it, but I'll tell you anyways. My final thing, it's going to be your emotions. This is a strategy that is going to affect, and this cut across to the MA people as well, your emotions in the exam hall. A lot is going to be going on in your brain. You want to keep your composure. You don't want to go be ahead of yourself. You don't want to panic a lot. You don't want to start freaking out. There are some of you going to get exam fever. But keep your brain sane. If you get to the exam or question paper is put there, you flip the question paper and it looks like everything is going blank, just calm yourself down, take a deep breath, and calm yourself down because you are panicking. You are thinking too much. Calm yourself down. Don't let your heart be racing. And like I was telling you yesterday, some people say, oh, the devil, me fear for before. Like I've said, you see, the devil doesn't know your GPS. You have not reached the level where the devil will come after you. With all due respect, your success doesn't terrify the devil. Okay? If the devil has some people to deal with, he would go after the Elon Musk, the big guys. Not you. You've not reached that level. So forget that story you tell yourself. Keep yourself sane. A lot is going to happen. If you think you are freaking out, just stop. Calm yourself down. Practice your breathing. Breathe. Just control your breath and be conscious of your breath. Control your breath. Get water. Sip some water. Calm yourself down and bring your brain back. Because if you start panicking and you don't stop it in less than 60 seconds, the resulting effect is everything will fly out. Why? Because all the blood in your body will be focusing on coming to your heart because your heart is pumping more blood. When that happens, there is no much blood going to your brain. When that happens, you can't recollect things. So immediately you start it, it comes, just calm yourself down. Just calm yourself down. What are you afraid of? Didn't you say you are a Christian? Didn't you say the one who lives inside of you is greater than the one who lives in the world? So you think after all those confessions you make, the devil will come after you? Hey, then what kind of Christian are you? This one there is Banku Christian and now say Fufu Christian. You said you are a Christian. The one who lives inside of me is bigger than who live in the world. So why do you think the devil will come after you? Nah. He can't come after you. He cannot. Because there are cardial of angels that are around you. How the heck can the devil come around you? If you say what lives in you is bigger than what lives in the world. And nothing I may say, keep your composure. Control what happens around you, within you, by yourself. So you don't freak out in the exam hall. Because some of you, that is your problem. You get to the exam hall and for some reason, the Lulu sets in and, everything is gone. Calm down. It's not the devil. It's your own life coming around you. And that is something that has nothing to do with your learning. Has nothing to do with what you write. It's about the battles that you are going to go through in that 3 hours. That's why I said control your emotions. Control your emotions. Practice breathing exercise. Have some water around you. Sip some water and learn to calm yourself down. Immediately you start freaking, just calm yourself down. You got to do this. So that's my general recommend. The last one, emotion part, is for everybody. Man, accounting student too. You're also going to have some delulu in the exam hall. Make sure you control it. But these are the things that you have to do as audit and assurance students. Read the question thoroughly. Start with what you can do best first. Please read all the questions. Your grammar. Allocate time very well. Discipline yourself. Review your work. But if there is anything I want to leave you with, it's your emotions. And like I said, the devil doesn't know you. You've not reached the level that the devil will come after you. What do you have? What have you achieved? What value have you added to the world? Again, with all due respect, but you have not reached the level that the devil will come after you. So control your emotions and stop lying to yourself and causing yourself to experience things you are not supposed to be experiencing. Because you said you are a Christian. You said what lives in you is greater than what lives in the world. So if what lives in you is bigger than what is in the world, there is no way you should allow the world to control what is in you. And nothing I may say, be conscious of your emotions. That's for auditing people. Man accounting. What the heck? I've told you what the heck you are supposed to do already, isn't it? Number one, take out all the written part first. Okay? Take out all the written or comment questions first. Like I've told you, a minimum of 30% in the exam hall. Last semester it was 36. I've shown you that during our revision discussion. There will be a lot of theories. Read through all the questions and take away all the theories. The key thing here is make sure you answer each question on a fresh page. Don't answer two separate questions on the same page. Each question has to be on a fresh page. So take out all the theories. Management accounting. Again, why that approach? Because I don't want you to leave the exam hall. Then you will finish the paper and something will tell you, my son, take the exam paper and look at it again. Then you flip question 4B. 10-mark question. It was something you read, but you didn't see it. And Nuntina, I said, read through all the questions and answer all the theories first. Then after that, you start with the computation issues, the calculation issues, in the order of how you think you can approach them. Short-term decisions, whatever the heck, variance analysis, whatever the heck, budgeting, whatever the heck. But please, the reason people fail management accounting, it's because of understanding of the English language. And I tell you always, it's not the kind of English you speak. The management accounting English. So make sure you read well to understand what is going on in the question. Okay? Read well to understand what is going on in the question, especially when you're dealing with short-term decisions. You got to be extra careful. When you're dealing with the budgeting, you got to be extra careful. When you're dealing with variance analysis, you got to be extra careful. When you're dealing with the performance measurement side, you got to be extra careful, because you don't just read and take the words on the face value like that. You have to read and ask yourself, as a management accountant, what is the meaning of this? What am I supposed to do with this? How do I treat this? What principle do I apply? So English is going to be crucial here. So if there's any takeaway for management accounting, read all the questions, take out all the theories you can do as fast as possible. It's up to 30% minimum. If the examiner gets goosebump, he can take it to 36 like last semester, or 40. If he does that, like imagine it's 30%. And these theories are fresh in your head, you've read them, and you're able to get 20 or 25 of the 30. Then you do a little of the calculation, you should be able to pass the management accounting examination. It's not rocket science. You should be able to pass it. Okay, so take out all the theories. Start with what you can do best first, in that order, after all the theories. Then make sure you pay attention to the context of the English very well as well in that particular case. Then the other issues I shared in the audit people, your time. Discipline yourself. Time allocation is going to be crucial. Time will be your enemy always in the exam hall. So make sure you allocate it well. That is why the trick in management accounting is take away all the written part first. When you do that, chances are you're going to save some time. Then you can now allocate that time to the calculation part, which will require more calculations, more punching, and everything. Please, I don't know whatever the heck calculator you're going to be using in the exam hall, but whatever calculator you're going to be using, make sure that the calculator is working well. You want to make sure that when you get to the exam hall, you clear all the calculator, you clear all the information on the calculator very well, and then as you are working into it, make sure you clear, because there are sometimes, I don't know, the calculator will start misbehaving and you punch a figure and it gives you wrong answer. So although you are doing the right thing, you end up getting the wrong arithmetic figures. And some of you have experienced that in our mock, in our performance evaluation test, in our assignments. You cannot take that same thing into the exam hall. So be careful. Anything you are punching, look on the calculator and make sure that you are punching. If it is 175 times 19, you are punching 175 times 19. Please be careful. Be careful. Then the review of work that I said in the audit, people, it applies to you as well. Get ready to stop work. Quickly go through the theories that you have answered, because they are 30 marks area. You want to go through them and see if really this is what you are supposed to have said, if grammatically everything sounds well. Okay. And then certainly, like I said earlier, your emotions, that's going to cut across for everybody. So this is what you have to understand and also do for the examination. And this is where we end for the discussion today. And we wish you all the best as you go in the exam hall. 9 a.m. tomorrow for man accounting students, and 2 p.m. tomorrow for the advanced audit and assurance students. Tomorrow we're going to meet for principles of taxation and advanced taxation, which is going to be on Wednesday. So tomorrow we're going to meet for the taxation students and see what we can do. But hey, go into the exam hall, take note of everything that I've shared with you. But if there is anything that I want you to really, really, really do, is your emotions. That's really on my top priority. That's really on my list. Because you can learn all the learning. You can know all the things. But if you get to the exam hall and the Lulu come over you, and you don't control the Lulu, you're going to fail the exam. So if there is anything I want to leave you with, your emotions, keep it in check. Practice breathing and be able to calm yourself down. You've done this before. This is not the first time you're writing an examination. You've done this before. You're not going to die. This is not labor ward you're going to give birth that it's possible that maybe the child is stubborn and you can die at a labor ward. Nah, this is not labor ward. Okay? You are not flying to Mountain Kilimanjaro or whatever the heck. It's an exam. Calm yourself down. And the God who has brought you this far will seek you through that 3 hours so you can pass the examination. He that is with you is bigger than he that is in the world. So what the heck are you afraid of? Like, what the heck? So that's it about that. Have a great time. Sleep well. Very important. Some of you are not going to sleep. You're going to do mining by this time. Go and bath and sleep. Bath and sleep. So that tomorrow morning you wake up, have a great breakfast. Quality breakfast. Right? Some quality breakfast. Then have a chauffeur take you to the exam hall. Relax. No pressure. It's not now you are jumping from one trotro to another, one trotro to another. By the time you reach the exam hall, you are sweating and breathing like a pregnant dog. Flex yourself, like treat yourself like a queen or a king. Tomorrow, it won't cause you to go broke. That will affect your emotions. All that contributes to your sanity in the exam hall. Okay, so that's the idea. Also, then quality is relative. Nah, quality is quality. Quality breakfast means quality breakfast, not your banku and okra stew that you be eating in the morning. That's no good. You can't eat banku and okra stew or kenke and chinalo and go and sit behind management accounting paper or advanced audit. So have a quality sleep and make sure you work well. And that's it about that. We wish you all the best as you go. And we hope that you go in there and make yourself proud and pass the examination and continue with your journey for those of you who will be continuing in that particular case. Bye bye.